and welcome to another episode of the Kinvestor Report. You know who I am, Arlen, and this is where I chat with industry experts to discuss the market, commodities, stocks, and the economy. This interview is not investment advice. I'm not an investment advisor, professional geologist. However, I've been kicking rocks for around 24 years. If Kin or myself has any financial interest in any of the companies mentioned in today's interview, it'll certainly be disclosed. Do your own due diligence. This is for entertainment purposes only. Today I'm joined by John Kaiser, legendary John Kaiser, resource analyst and founder of Kaiser Research Online. Very familiar face on the conference scene. Certainly been around the market since I first started 24 years ago. And he certainly has an uncanny ability to separate his fear from greed and good from bad. First time I've ever talked to John, and I'm pretty pumped to have him on the show today. Well, John, thanks for taking the time today. And I know you're a busy man, and it seems like we got a little bit of a pulse back in the market. So you could be busier. And as I just said, yeah, we have a pulse, or it feels like we got a pulse back in the resource market. And, you know, I've spent 13 years getting excited about these little blips when they show up, only to be disappointed time and time again, it feels. What's your take here? Do you think we're at a different stage of the cycle, or, you know?
I think we're on the threshold of finally, after a 12, 13-year bear market, for a return of a resource junior bull cycle. Now, I always thought it would be the critical metals, base metals, and so on, with security of supply issues arising from the conflict between global West and global East, which would force everybody to start looking in their own backyard and relax some of these regulations and things that keep stuff from being found and developed in secure jurisdictions like North America and Europe. But now I'm thinking it's going to be gold. Gold's run from February of 2024 to where it is now. That's incredible. It's a record high in real price terms from $400 in 1980, inflation adjusted. It's up 100%. That's a big deal. But there's a disconnect. People seem to think gold is going back below 2000. So for me, this is a super exciting period for me. I've got 110 bottom fish in my collection. I've already got 24 of my favorites. You were right, I am super busy. It is fun to go to work now in the morning and look which ones are going to pop next. But we're still on the cusp, waiting for it to ignite, for liftoff to take place.
100%. It's like it's been the barbaric relic, right? And yet it's been one of the best performing asset classes over the last 25 years, right? And when people start kind of putting that in their head, the generalists start coming around. And yeah, I love the bottom fishing approach that you have. Can you talk a bit more about that? What is your criteria for bottom fishing? Because you are one of the best ones out there.
One of the things I most look for is, do I trust the management? Are they serious wealth creators, or are they just setting up a pump and dump type of story? So with the 40 years I've been in this, I've developed an awareness of which groups are reliable, which even when they fail, gave it a real shot. And I've also have a good nose for those who are just trouble. But it's also, there's younger new groups coming in. So there's groups I know nothing about that I'm learning about all the time and getting comfortable with. So management is a key filter that I use. Ideally, there should be money in the company, and the insiders should have some meaningful stake in the company. But the main thing I look for is a story, some sort of interesting story. What's the company doing differently from what others have done? If it's like a project being recycled, or if they're in some completely new area. But the key thing is there's a missing piece. There's something missing. Is it money? Is it a permit? Is it any sort of thing? Sometimes it's perverse. I've got one of them, Almadex Minerals, which it was trading at cash breakup, and it's been quietly building this portfolio of these copper, gold, porphyry lithocap projects in the United States using a completely new theory. And poor Morgan Paul was so paranoid about others seeing where the locations. He hasn't even put the locations on the map yet where these all are. So this stock, the missing piece is simply greater awareness of what these guys are doing. So I monitor for the missing piece. I've got this 450 subscription, which gives access to my entire information system, which is the Kaiser Research. It's got 2,000 companies in it. It's a powerful corporate and project level filter. So we filter stuff. That's how I narrow the field down to companies. And then those people, we monitor this bottom fish collection and we accumulate it relatively in quiet without competition. And then when that missing piece falls into place and the stock has doubled and I can explain it to a broader audience without having to explain like dead money risk and that sort of missing piece concept. Then I graduated to the favorites collection where it costs only $10 a month or $100 a year US to have access to my Kaiser Watch Substack platform. So this new platform is intended for rebuilding the audiences. The Gen Zs, the millennials, even some of Generation X, they never really followed us boomer generation into this resource junior sector. And part of my challenge for myself is to teach this audience, which is so fixated on momentum trading, to start to think in terms of longer term fundamental outcome gambling, where you have to like wait 2-3 months for an event such as news result assays and so on. But you turn it into kind of a form of entertainment where you get the story in your head, you figure out the milestones, you know what the company's supposed to do, you know what the impact will be if they deliver as you expect, and you don't have to waste every second of the day monitoring your portfolio. You just periodically look at it and see what's happening and wait for, say, some news flash that, hey, we'll find these results are in and they are good, type of thing.
Mm-hmm. I think one of the challenges we've seen in this younger generation that you just talked about is that instant gratification that they've grown up with, right? And when you talk about longer term fundamentals, and what I feel and see is this instant gratification buying, they don't truly understand the long-term fundamentals or why they're buying it. That's why they can't hold it for those periods of times to actually realize the gains that could be had as these companies progress these assets, right? And yeah, that's a struggle we're always struggling with, John, is like how to teach this generation to like patience can be rewarded, right? And
yeah, and I for that had developed 15-20 years ago this concept of the rational speculation model, which when I started in the 80s, I had no idea why a stock went from 50 cents to $4 or anything. And eventually I learned that the 9 stages from grassroots all the way to production, they're really a certainty ladder where your certainty becomes more and more. It starts off with horrible uncertainty, like you have a half a percent to 1% chance that what you hope to have there, you actually get it delivered. And you can draw a fair value channel as the project progresses all the way from the beginning to the end, based on what shape the outcome, like the size of the prize is taking. Like for example, right now with A-Mark Resources, they made the fabulous Aurora discovery that they announced in January. This stock was sort of bumbling along at a $40 million valuation, and it almost overnight went to a tenfold increase. Now, this is called the S-curve. I call it the S-curve. Pierre Lassonde has also described it. So when you go into that discovery mode, the perverse thing is you often achieve a peak valuation that ends up what this project is worth at the end of the day when it finally goes into production. And that's because in the beginning, you don't know the limits of the discovery. How deep will it go? How much a long strike? What will the grade end up being? Will there be repetitions as you suddenly look in this area and see multiple phases of, say, a porphyry intrusion? So that's what makes this space exciting. The part about the Lassonde curve that's not so exciting is after you've got your first economic study PEA done, you actually end up being undervalued. The valley of death or value trough. The uncertainty is how long is this going to take? How much more money will it take? What will the dilution be? Yes, the value will go up, but the share price may never go up more because you end up diluting and diluting to pay for this project. But this is a mathematical construct which younger people can get their heads around. The thing about, say, Bitcoin, you don't need to know anything about Bitcoin. It doesn't matter. So long as the trend is your friend, you just own it or sell it and play the swings. But there's no rhyme or reason behind any of it except true faith that it will go up, up, up forever. The thing about all resource plays is they have a finite limit. They are not like technology or .com companies where you get a winner-take-all dynamic. So all the competitors end up with the same value simultaneous as what the ultimate winner's value and the entire market will end up being worth. With a deposit, there's only going to be so many gold ounces. It's going to be mined over 10 to 20 years, so many copper pounds. So there is a finite limit to it. The sky is never the limit. But that's also what allows you to quantify where you are right now. If the prize is $2 billion, where should it be priced right now? Is it undervalued with the fair valued thing? Or as you get new results, is the prize getting smaller or is the size of the prize getting bigger? And that's what makes the whole business entertaining and so lucrative at the initial discovery delineation stage.
Yep, super exciting. I didn't want to interrupt you, but just for all my listeners, I am, or A-Mark is a client of Kin Communications, and myself, I do hold equity, and I have a financial interest in that client. So I also can't make any comments about A-Mark on this. I want to talk about management because you talked about that part of criteria. And a big complaint I get is like people like you and people like me, we get access to management, right? Can you debunk that for people?
Well, I don't get access to top management of bigger companies.
Fair
I
enough.
get access to companies who are bottom fish. So they're very happy to have somebody like me talk to them. There's a company, Faraday Copper, where like I even spoke to the person, the CEO at PDAC, but he just blew me off and handed me off to his IR person. So there's an example that even people like me do not have access to the high level CEOs. But there's groups like you mentioned. You have a conflict of interest with A-Mark Resources. The Hunter Dickinson group is great. Bob Dickinson does talk to me, but that's because he also has stocks like Quartz Mountain. I hope that isn't also one of your clients. But that was
No,
a
it's not.
bottom fish that is now on the favorites collection, and they're in the midst of drilling this Maestro project, which could be another Blackwater type outcome, which Blackwater, Artemis Gold's now got a $5 billion Canadian valuation.
And the chart on that stock is just unbelievable. Like it's
Now,
just amazing.
there's where timing is so great because they
Yeah.
get to sell their gold at $3,000 plus. They haven't forward sold it or
Yeah.
anything like that. But here's again an example where I can take the sort of size of the Blackwater project and get all the cost numbers and do what I call an outcome visualization, where I kind of do a simple life of mine scenario of what if the Maestro, the Prodigy Zone ends up looking similar to this similar grade. Well, we get the cost from their technical report, we plug it into a DCF style model, and we can see what the outcome will be. And then I can actually print both an S-curve and a fair value channel for that. And then we can see where it's being priced right now. So in a couple of weeks, we should get assays for the Maestro, and that'll tell us what sort of game. Is it going to be stuck being a smaller high-grade underground scenario, or is it going to be this bulk tonnage thing whose footprint, they're not drilling the same size of footprint, but it has a potential footprint. Is it going to grow to that? So again, you can quantify this game and see where you are. And the beauty about not being in a bull market, a raging bull market, is you actually can see value and you can move when results come in. There isn't always an instantaneous reaction. In the bull cycle, what I didn't like about the 2000s was that it was a game of which one was less overvalued than the others. This is the first time in my career where actually you see things undervalued, and hopefully have a period of fair value where when more results come out, it boosts the value higher. And then eventually we'll get into the part where everything's overvalued because everybody's now in the market and finally admits that we are in a bull cycle.
Yeah, that's how every cycle goes, right? Like 100%. But yeah, speaking of like, I'm so happy for Bob Dickinson, like between Quartz and A-Mark, he's back,
Oh yeah.
and yeah, and like I've got to know him over the years. And with someone with his type of success, his kindness and his heart and how good he is to people, there's not a lot of people in the industry that could, have such a long career and be liked by so many people. Like he's just liked by everybody, right? You go to a conference with him, people surround him, right? He's awesome.
And he sticks with his companies. Like
Yeah.
A-Mark was a bottom fish back in 1999. When I had Diane
Wow.
Nicholson in my Metals Investor Forum session, she kind of groaned when I said, this has been one of my longest bottom fish without a rollback ever. And say, okay, thanks for that, John.
Yeah.
They stick with their companies.
Yeah.
And Northcliffe is another one that I'm looking at right now. They have that tungsten project in New Brunswick. Tungsten's going to be a big headache for America. This project
Huge.
is almost shovel ready, and they just got from between the Canadian government and the U.S. government, $29 million to kind of finish all the engineering and permitting and stuff like that. And of course, we need a higher tungsten price, but that's going to come. This conflict between the United States and China is not going to resolve itself in any happy way. I think the metals markets are going to fragment into the metal prices that are sort of the China price, and then there's going to be a separate, almost a separate trading zone where higher metal prices will prevail, which will make it feasible to develop these deposits in countries like Canada, United States, where you have much higher health and safety standards, much stronger environmental standards than you have in some of these other jurisdictions, which is why we're in such bad shape. The China price kills almost everything out there. Indonesia with its dirty nickel price, rare earths out of China. It's difficult in these secure jurisdictions. And the juniors, we had that great period starting in the 90s into the 2000s where we expanded into these so-called third world frontiers, South America, Africa, but all of that is becoming a no-go zone for juniors. Even Mexico is now really a no-go zone for many juniors because of the politics and the government reaching in and grabbing back more of these assets. And of course, in the Sahel of Africa, you've got now the Russians in there backing the military coups and taking over the mines. So we really have to move back to Canada, United States. And so this is where I'm optimistic that Trump will force the U.S. Forest Service and the BLM to dial back this sort of health insurance type of mentality of deny and delay. Let's look at this. And also they need to look at the exploration permitting. The reason there aren't a huge number of deposits to be, put into production because now we need them is it takes forever to get a permit. You waste a year waiting for it. Solitario is still waiting for the Ponderosa plan of operations. They hope to have it by August and maybe get a drill program going this year because they have this attitude that all mining should be done elsewhere, but not in our backyard. And Canada has its First Nations consultation problem where they can arbitrarily decide to either cooperate or not cooperate. And there are no consequences if they decide, now we just want to have nothing done in our backyard. Some groups see the benefits, and there's been a big attitude change amongst the juniors. They understand they need to appreciate what the local stakeholders' needs are and all that. They need to work with them. They can't just come in there and trash everything. And these juniors, the serious ones, again, this is, you ask a little about management, the serious ones are like good Boy Scouts. They leave no trace. I have one example of a juniors working in northeastern Washington having to deal with the U.S. Forest Service. And they finally got permission for a drill program. They go do it. And then he gets this call, and there's this lady screaming at him, "You didn't drill where you were permitted to drill." And he's like, "What are you talking about?" And it turned out they had done such a good cleanup job of the drill pad that she was there, but didn't even notice it was disturbed. So the juniors, the good guys and gals, they know how to do it properly.
They are doing it right. Yeah, that's awesome. That's good to hear. So what are the management, like we talked about the Hunter Dickinson group and all that. What are some other groups out there that you think that people should be paying attention to as a whole?
Well, there's a whole range of types of companies. For example, there's the prospect generator farm out type companies. For example, Tim Termundi's group at Eagle Plains Resources, they generate prospects and farm them out to others. There's a group like Endurance Gold. Now that's Robert Boyd, used to be in charge of the exploration division of Homestake. They've got the Reliance project, and they've spent $10 million on 108 drill holes and haven't yet done a resource estimate. But there's an example, that Newfound Gold Queensway project's got a $450 million valuation. These guys have a $40 million valuation. And you can see that they've done enough work. They'll do a resource estimate in the fourth quarter of this year, where we'll see what the open pitables portion is. But this is the kind of project where if we suddenly get into a bull market and the stock gets out of its bottom fish level, they can raise serious money to start doing this drilling, systematic drilling. Right now, they're almost doing it like guerrilla warfare, like, trench warfare, bit by bit, piecing it all together slowly. And so they've drilled like 25,000 meters versus 700,000 meters. And the resource estimate that company in Newfoundland delivered, it was pathetic for the amount of money that they put into that. But there you've got these strange sort of cult things with Eric Sprott. He made a ton of money with the Fosterville project and Kirkland Lake and that. So you had this money seeding this in, and other juniors have not benefited from this sort of largesse of people having made big windfalls. And that's been a tough part about this last decade, is there haven't been these widespread windfalls that get recycled. This is why it's so tough to get out of this bear trap, which is why I think we're not going to have an overnight explosion. It's going to be a gradual, it'll take a year for it to really get going. And that's because you need the money made to be recycled. What we've had, windfalls here and there, the money's made, it's put away, it's not recycled back. The 2000s, it was insane. There was $100 billion worth of takeover bids of juniors, involving about 100 of them during that period, starting like in 2005 until everything fell apart in 2013, 14. So that money went back into the system and enabled other projects to be properly financed. You're asking about other groups. Like for example, I like Canalaska Uranium with Corey Bellick and as the CEO, ex-Cameco. Nathan Bridge as his VP of exploration. So they are at least getting the money needed, but the market still doesn't believe that they have a MacArthur clone on their hand. But when you're drilling these 800-meter deep holes, it takes time, takes a lot of money. And as you know, you're familiar with NextGen, when you get these very high-grade Athabasca Basin deposits, they tend to be small, so you have to carefully stitch them all together. But here's a group, they even know how to do those uranium readings, where you have to have that special instrument, and you have to know how to calibrate it properly, whereas the less experienced groups, they just run a scintillometer along the core and say, oh, we got lots of clicks. So these types of technical in-house skills, and that's like you take Zach Flood's Kenorland, that's like a very well-financed prospect generator. And what's interesting is they do high-level analysis of potential regions, almost AI style of analysis, and then they go in there and gather data to beef up. They basically have a proprietary database that they've added to the government generated and from historical stuff, and they're able to attract strong farm outs from majors. So there's another group that was I didn't repeat them as a bottom fish because they were so successful. They actually climbed out of the bottom fish rut, and they have good, strong backing from people familiar with this model. So,
yeah. Okay, so you said you got 110 names in the bottom fishing sector right now, and you're kind of licking your chops. Do you when you see that you're at the top of the cycle, does that number go to zero because everything's just so overvalued, or are you still finding names even at the top of a cycle that you think are undervalued?
That you make a very good point. In April 1997, I was in Toronto at a conference, and BRIEX was falling apart. I had gained like 1,000 subscribers in 1 month because I was talking about this, and all these people were trying to figure out what was going on. But I had my 95 bottom fish collection, my 96 bottom fish collection were fabulous collections. I think the one I have now is far superior to those ones. But my collection for 97 was garbage. And after I gave my talk, a subscriber, didn't know who he was, came up to me and handed me a note and dashed away. And the note said, "Your bottom fish are all garbage this year. Why is that?" And the reason was there were no bottom fish left. I was kind of like scraping the bottom of the barrel. So I will end up cycling it down, and it'll be a much smaller group, and I'll just be talking about the favorites collection if we do end up in such a nirvana as you're describing.
Yeah. Yeah. So I'm going to assume like your perfect subscriber is someone that is willing to be patient, someone that understands the risk, right? But someone who's also looking for a little bit more than 5%. Right.
Yeah, I
Like,
mean, the bottom fish expectation is 500%.
yeah,
So
exactly. I
you're
was being
looking for
facetious a little bit.
15%, and you want it to
Yeah.
go to like 60, 70 cents just when the missing piece falls, and then go from 60 cents to several dollars. So
Yeah.
it's a very small audience, and they're all retiring or passing away. I've lost so many subscribers from simply passing away, and the newcomers, they're not really there, which is why I've now created this Kaiser Watch Substack thing, where I can sort of introduce some bottom fish once in a while so that people kind of get the concept. But I talk more about, say an A-mark when it's jumped out of the bottom fish. We now know what the story is. We know what has to happen next, type of thing. So and the other type of subscriber that I have is they don't care what I'm saying, what stocks I like. They like my database as a time-saving tool because they can put in their filters. They have their own idea of what's going to work in the future, how the future is going to unfold, and they can get the list. It's got a great display with the graphics and all the facts, and then you click on into the profile to get more detail, hop to the website. So it's a real efficiency tool. It's unlike this abomination called CDAR Plus, which CDAR was great. Now they made a 20 click thing to even get one document. And they didn't even add titles to the filings. Like, how can you like wreck something that wasn't perfect, make it worse, and not fix the thing that was sort of missing with the old CDAR, so that you knew which news release you wanted to click on, or what the technical report, what project was for.
That's incredible how challenging that website is. Like, it's incredible, right? Like, it's just like, wow. Okay. Well, they'll go back to the drawing board on that one, hopefully. Okay. So we talked quickly about tungsten. When you told me tungsten, I think about bullets. Am I right?
Tungsten is mainly in like they can use depleted uranium in bullets. It's even better than tungsten, but and lead. But it's a very hard material with a high melting point. So for the tool industry, it's really critical. And of course, a lot of armaments and things like that. Tungsten, you want tungsten that's not going to melt on you under intense conditions. So like the whole oil drilling business, they use tungsten in their bits, so they need that to grind through all this stuff. So it isn't a fancy thing like lithium, which is critical for a new technology. It's a basic thing that's needed for everything. It's kind of like zinc, to galvanize steel so that it doesn't rust away on you. So that's it. And China dominates 85% of the supply.
Yeah, we're seeing graphite stocks starting to go a little crazy now too, right? Because the US is starting to talk about these big tariffs and from graphite supply in China. So I agree with this model is looking at some of these critical metals, specifically in the US and Canada right now, that China dominates production on, and just throw a dart, basically, right? Like the Trump administration is certainly showing that they're here to create some action, right? Which is really nice. It feels like I'd rather be investing in mining stories in the States and in Canada right now, to be quite honest, until Canada figures out that mess, right?
But we in the West have to operate by the profit margin. See, China can operate its raw material mines at break even. For example, with rare earths, they don't make money on rare earths. That's what creates the China price that nobody else can really make money with. But they then control the downstream magnet market where they make the markup. So this is a serious problem. And of course you introduce tariffs, which is what he's trying to do on some of these raw materials. But we still have these 3 to 5 year timelines to get anything into production. So the way he's going about it is not going to really be beneficial in getting this going. But this is where I'm optimistic about the exploration. the longer term problem. And for me, I was optimistic about the juniors becoming salvation warriors, whether it was going to be Biden or Kamala Harris to be the president or Trump. It didn't really matter. This is a problem that the global West needs to deal with because the global East autocracies, they are joining forces. They're going to get the global South throwing in their lot with the global East because they all know how to butter each other's bread much more effectively than global West nations, even though we're starting to see global West nations starting to behave like global East nations. So this was going to be an issue. And one of the things I always thought was that if you can, like blockchain and all that can help you certify in the chain of custody, where did this stuff come from? Is it clean or dirty? And there can be products made with metals that have a clean pedigree that can be dominated. Now, you can't force ordinary, like the lower half of the economic spectrum, to buy premium priced green materials, but there is that upper half which can make that choice. And I was always hopeful that we would get these more expensive metals that are certified as clean and green, have a market for the end products amongst the consumers. So be a market-driven solution to this problem of all these cheap inputs coming from these other parts of the world. Unfortunately, the current administration doesn't seem to think that's the right path. They seem to think that a race to the bottom and eliminating all rules on that and become just like China and Russia is the best way to become competitive in terms of costs for raw material production. And even there's an irony. I mean, the oil producers are screaming because they need $65 oil to make shale oil come out of the ground. And OPEC Plus has now said, okay, well, screw all this. So we're going to, stop, maintaining our quotas. We're going to flood the market, and the shale producers are going to be out of business. So drill, baby, drill won't happen simply because they need that higher price for the shale oil to be worth developing.
Yep. Speaking of clean and green, and then we'll wrap this up. Presidential executive order signed over the last couple of days on uranium in the States. What's any take there? Do you have any ideas, concepts there?
The uranium deposits in the United States are lower grade. I think the Athabasca Basin, with its high grade deposits and their small footprint, that's really the place to go. And of course, Kazakhstan is the big elephant in the room. It's peculiar that the nuclear energy org.org have not updated their supply statistics since 2022. They were usually good. Every July they would publish the past year's supply, but they haven't done that. I'm really curious to find out, is Kazakhstan still this big producer that keeps growing and growing, or have they hit the wall? Have they plateaued? Or are they even in decline? So the uranium, uranium in the United States, I like what Energy Fuels is doing, processing mineral sands, which have a radiation problem with not so much uranium, but thorium in that, and being able to process these mineral sands and get the rare earths out of it to create a domestic supply. So it's good to have some sort of uranium production facilities in the United States, but I think places like the Athabasca Basin and maybe up in Nunavut, the Thelon Basin, if they can get that going where Forum Energy is busy, that's where I think people should be focused for the uranium. The American stuff is sort of lower grade type. If they can do in situ, that's great. Probably not a good idea to do open pit mining of this sort of low grade material.
Okay. Well, John, that wraps it up. Thank you for joining me today on the show. You can keep up to date with John and his work through his website at kaiserresearch.com. Subscribe to his online monthly memberships. He's a wealth of information, especially for some of you neat people that are in the industry, want to learn about mining and the cycles of mining and timing and those missing pieces. Super important. If you haven't already, be sure to join the Kinvestor Network by subscribing to our channel. Follow us on social media. You can kind of join our conferences that we put online as well, and continue to educate yourself about the space. We think it's super exciting right now. Timing is there. And if John is right, we could see some great years ahead of us here. So happy investing. Take care. And until next time.